Hey, what is up everyone, and welcome back to another video. Today we're taking a look at Dogecoin, which is currently up 4.5%. The entire market is seeing a small reversal from yesterday's and really from last week's crash. It's been quite a steep one. We went from 95k after the crypto reserve news all the way down to 75k on Bitcoin. Now we're at 81, and Dogecoin really struggled, over the past week as well. However, not as much as all the other meme coins. If we compare it to, Dog with Hat, for example, this fell 50% from roughly 80 cents down to 40 cents. SHIB fell from 15 down to 11, whatever that was. I'm not sure in the percent terms, but same with Pepe. Yeah, Doge fell, quite substantially as well, maybe like 20 to 30%. But regardless, it's the one coin that has been holding very, very strong from all the meme coins. If we compare it to, the run it's had from 2024 with all the other meme coins, it's performing a lot better. I think SHIB is probably the only comparable one, but for example, Dog with Hat, we were at 20 cents, but if we compare it to the highs, it went from $4.90 all the way down to 40 cents. It's crazy. So yeah, I'd say Doge is one of the only coins that is maintaining its strength, at least from the meme coin space. And the main reason for that is obviously because of how strong its community is, with Elon Musk, with an entire department in the US government. And although it may not be a direct correlation, it's still a meme and a meme inside of the government. So yeah, it's just added confluence. But before we jump into exactly why the market's crashing and what we're going to be doing, I want to ask you guys to check out the Discord down below. You can see on the screen right now just how many trades our members are winning from simply copying our trades. Inside of the Discord, you can not only copy our trades, but you can also copy my long-term crypto portfolio, and you can also learn my strategy so that you can trade for yourself. So yeah, make sure you join up. Now back to Dogecoin. So if you remember a few videos ago, we talked about a few key DCA levels. One of those was right here at 20 cents, and the second one was right here at 15 cents, which was also hit. And in all the videos I mentioned capital efficiency, and what that essentially is using your capital efficiently and entering a lot more on each lower level when you DCA rather than the higher level. So if you entered with $10,000 at 20 cents, you'd want to enter with, let's say, $15,000 at 15 cents. You want to roughly add 20 to 50% of the initial entry value to the second entry value, and then 20 to 50% of the second entry value to the third, and so on and so forth. So it's very, very important to actually distribute your capital and make a plan so that you can invest efficiently like that. And what that essentially will do is have a way lower average entry. So if you entered, with even numbers, let's say 10,000 here, your average entry would be somewhere right around bang in the middle, maybe a bit higher due to fees and whatnot. If you entered with, how we say 10,000 and 15,000 here, your average entry would be a lot lower, probably roughly a quarter, right around here, and you'd probably be near break even right now, even though your first entry was at 20 cents and we're at 16 cents right now. So that's why it's very, very important. When the coin does start to reverse, you'll have, a way higher chance of being at break even or profits when that reversal does come. And yeah, that's what we're essentially doing. We do have a third level as well right here at roughly 5 cents. We're probably gonna find some other levels, like maybe 12, 13 cents, 9, 10 cents as well. We're just gonna keep on observing and trying to find more areas. The main thing is obviously Bitcoin, and the reason Bitcoin is crashing is due to all the uncertainty in the market. So, we have the Ukraine and Russia war, we have the tariffs. There's a lot of things going on, and it's not just a crypto crash that's happening, it's the entire market that's crashing. So the S&P down nearly 3% yesterday, and this is huge. Bitcoin was down 3% nearly as well yesterday, but you have to remember Bitcoin has a market cap of like 1 trillion or maximum 2 trillion. I'm not sure the exact figure, but the S&P has a market cap of 50 plus trillion dollars. So a 3% dip is literally billions in comparison to Bitcoin. So it's very, very large. It's quite unheard of for the S&P to crash however much this was. I think 10%. It's lost like $5 trillion worth in really under 2 weeks, which is crazy. And it's going to continue to fall unless the market is able to resolve itself, and the market is mostly the politics that are going on. Where would we crash to? Roughly 5.4, 5.5k on the S&P. How that would look like on Bitcoin is probably 74, 69,000, somewhere around here. And that's just going to be fed a lot worse into altcoins like ETH, HBAR, XRP, and Doge being one of them. Doge would probably drop to maybe 10 to 11 cents if that does happen, as we have this thing, Bitcoin dominance, which is prominently on the rise. If you compare it to the percent chart right here, you'll see it was rising massively yesterday, rising again today. It's over 61%. It touched 62% today, which is crazy. 62% dominance is very, very large. The previous time we were at 62%. If we avoid massive flash pump we got right here to 64.5 was back in 2021. But the thing in 2021 was we didn't have nowhere near as many altcoins as we do now. So for us to have this many altcoins and Bitcoin still be this dominant, yeah, we have the ETF and whatnot now, but the inflows haven't been majorly net positive currently on the Bitcoin ETF. We have had a few. We have had some major institutional investors like MicroStrategy. However, we also had that in 21. You know, MicroStrategy was purchasing Bitcoin, Tesla was purchasing Bitcoin. So it's not like we're experiencing something completely new, but you know, we were way higher than we are now. So we should see a drop. If we compare the actual charts, they are very, very similar. You know, we get this pump, the initial crash, the final pump, and then the dump. Other people compare it like this, you know, the pump, small dump, pump, top, crash. Same thing can be, you know, said for this right now. We have the major run up, the small pump, dump, final pump, top, and now we should see the dump, which is not what we're seeing right now. So yeah, very, very unfortunate stuff. We're gonna have to wait for obviously Trump to resolve the war, resolve the tariffs, and then we're gonna start to see the win. When would that happen? Probably when the Fed decides to cut rates. So Trump is probably looking to take out more debt on America and a bigger loan, meaning he needs lower rates. And what happens when there's lower rates? More people also take out loans, more money goes back into the economy, more money is spent investing and everything like that, and the market really, really thrives. Right now the rates are quite high, so what Trump is doing is causing pain on the stock market, on the economy, everything like that, so that the Fed is forced to cut rates. When they cut rates, he's going to borrow, you know, bonds are going up, so he's going to borrow against them and essentially provide a lot of liquidity into the market as more people will be taking out loans, and it should be a short to medium term bull run that is essentially created from that. Would we recover back to the highs? Most likely, and the reason for that is, you know, once everything blows over and the Fed cuts rates, you could probably expect us to pump back up to maybe 50 to 70% of the previous highs we've had. So if we're at 50 cents here, could probably expect us to be at 25, maybe 30, 35 cents right here, somewhere in this vicinity just from that. But we also have a lot of big news coming. Obviously the crypto reserve, once that gets enabled, huge. We have a lot of ETFs that are, you know, currently waiting to be approved. Hopefully they get approved after the Fed cuts rates and after everything is resolved, as that will be just added momentum, added fuel to the fire. You know, we have ETFs waiting for Doge, HBAR, XRP, Litecoin, I think other Solana. So lots of ETFs waiting. Once those get enabled, extra added pump, and it will just start a little snowball effect, and we should at least reach the previous highs. And you know, with Dogecoin, if we're entering right now and we're targeting the previous highs, that's a 3.2x, which is very, very easy. So yeah, that's what our plan is. Keep DCAing, keep our capital efficiency up, and have a plan. You know, if you have only whatever $10,000, $1,000, don't just enter fully on one specific level. Wait and distribute your capital evenly. If you think it's going to continue to fall, hold off a majority of the capital until that level. Still expose yourself slightly at these levels. Just keep on waiting, wait for the pump, because it will come eventually. You know, it might take a week, a month, but eventually it will come. If you did enjoy the video and you did find it helpful, please do make sure to like and subscribe. Again, if you want to be getting my trades every single day, then check out the Discord down below. And if you need a place to buy, sell, or trade cryptocurrency for the lowest fees with the best sign-up bonuses, then check out all the exchanges we're working with down below. Thank you all for watching. I'll see you all tomorrow. Goodbye, guys.